Is Manulife PAR right for you? Welcome to Question and Actuary, where you get answers to real questions. I am Pramod Sharma of Taxevity Insurance, where we bring clarity to life and health insurance. In 2017, whole life accounted for 57% of new premiums according to LIMRA. Manulife has Performax Gold, but that's non-par. 84% of whole life is par. Manulife exited that segment in 2008. Returning in 2018 makes business sense, and Manulife has the resources. The brand new Manulife PAR has the same basic pros and cons as all other participating whole life products. Clients pay high premiums and accept more risks in exchange for policy dividends if results are better than expected. PAR products are very difficult to compare because they lack the transparency and guarantees found in non-par whole life and universal life. You're expected to trust the insurer. New products often leave out important features. The original iPad had no multitasking or folders for 7 months. Manulife PAR launched with no option for LifePay premiums. Only 10-pay and 20-pay are available. Investment returns quickly become the largest component of the policy dividends, perhaps 60% by year 7 and 90% beyond year 20. How suitable is the investment approach? How good is the investment management? Backtesting of dividends helps show this, but Manulife has not released details. Why be skeptical? They're non-par Performax Gold. For 8 of the last 12 years, Manulife earned less on both their par account and non-par account than they've been crediting. They're projecting future decreases from their current rate of 5.25%. Established par whole life products generally show their past dividend interest rates. Canada Life goes back to 1989 and Sun to 1993. Manulife does not publish their dividend scale interest rate. Instead, they show the yields on their par account going back to 1985, which is useful. In 2017, they earned 5.6% after investment expenses. New products tend to have backtesting. When launching their non-par EquiBuild, Industrial Alliance simulated yields by comparing against par dividend scales going back to 1984. Besides backtesting, new products often have investment guarantees for at least 3 years. Manulife Performax Gold has for the last 12 years. Excellent. Guarantees show that the insurer stands behind their product, which helps build credibility and sales. Manulife says investment returns in their par account have medium predictability and stability, but high impact. Manulife PAR has no published backtesting and no guaranteed dividend scale interest rate beyond the current year's 6.25%. This increases risks for clients and advisors. Past successful class actions for par whole life arose from the harm caused by dividends lower than expected. Canadian insurers settled for hundreds of millions of dollars. Today is different. The biggest insurers are now owned by shareholders instead of policy owners. Most advisors are independent instead of captive agents of the insurers. Computers allow easy illustrations below the current scale. Projections need to be signed by the client and the advisor. The application forms require acknowledgement that results are variable. As a result, the risks for underperformance have shifted away from the insurers. Prudent advisors need to be more careful before making recommendations, unless they're retiring in the next few years. Is Manulife PAR the right choice? Let's look at the cons first. The launch dividend scale interest rate of 6.25% must be assumed for life in the projections without any history, backtesting, or guarantees. Is 6.25% sustainable? Volatility in the par account may be high. This is difficult to compare because companies report different information for different time frames. When looking at the dividend scale interest rate, the standard deviation for Sun Life is 0.76 since 1993. Manulife does not publish their dividend scale interest rate. The standard deviation in their par fund yield is 2.4. Unlike competitors, there's no second product optimized for long-term performance. Maybe that's coming later. Looking at the pros, Manulife has good advantages. There's the strength of the Manulife brand. There's the best buying experience in the industry with an excellent e-application, a reduced need for body fluids, fast underwriting now using artificial intelligence. There are high early guaranteed cash values, which is good for front-end leveraging. That's a topic for another video. There's improved premium flexibility, which is a traditional weakness with whole life. There are simpler illustrations and more readable policy contracts. Plus, the product is brand new. Innovation spurs innovation, and the insurance sector needs that. Competitors might quickly improve their own established products. Manulife Par closes a gap in their product offerings. There's lots for advisors and clients to like. Is Manulife Par the right choice? As Manulife says, the investment returns have a high impact on performance. What returns are sustainable? Before deciding, talk to your independent investment expert, perhaps an investment advisor or fee-only financial planner. Par whole life products are easier to sell than to compare or fix. That makes prudence more important. What do you think? Feel free to share below. To arrange a private chat, visit taxevity.com.